Hello, everyone. Happy Friday. Happy end of the week. How's everyone doing? Good morning, Jacob. Good morning, Patrick. Good morning, Ro. Morning, Daniel. Romper, Stomper, Bomper, Boo. Good morning, Mark. Eric. Good morning. Good morning, Jake. Good morning to the people hiding in the background. Good morning to Richard. All right, we got some interesting stuff going on. So, market sell off yesterday. Well, I should say the mega caps sold off. The mega caps. It was, people can blame things individually on any stock, but it was more of a mega cap rotation out of mega caps with the more, I will say, the more dovish CPI. And the Fed's. I mean, the odds up for a Fed cut are pretty much locked in September, based off what the market thinks at this point, not what the Fed says. And then there could be, three cuts. This back to three cuts this year, so a cut per meeting. And then we have the PPI come out, and this is what I'm afraid of. This is exactly what I'm afraid of. You get sticky inflation. Remember, if inflation gets stuck around 3%, it's still increasing at 3%. I think people keep mixing up. You got a inflation print back down, a CPI print back down. It's only running 3%. Well, that means the prices are still increasing 3% annually. It's not like prices are back down. They're still going up. They're just not going up as fast. My worry is, again, stagflation. Economy under the covers is crap, and if you took out all the government spending, if you took out all this massive government spending, things would be in the toilet. The skew effect from the 1%, I'll call it the 1%, even the 10%, the skew effect of, hey, because inflation doesn't really affect them that much. I mean, it affects them because they pay more for stuff, but it doesn't affect their bottom line of their lifestyle. I was looking in one area and I looked at all the sold homes. Okay, this is in an area that has a lot of horse property, up by Cave Creek, Carefree, and the whole area. I looked at all the sold homes, not physically looked at them, but on the MLS. Looked at all the sold homes in the last 2 years. Over 90%, and these are million to multi-million dollar properties. Everyone cash out. 90%. I can't say everyone. 90% all cash. Now, there these people worried about interest rates. Are they worried about mortgage rates? I mean, they're like the interest rates being high because you park your money, but it's all cash. A lot of people can't pay all cash for a house, or if they do pay out all cash for a house, they have nothing left. So that's my point. Now, that if inflation stays sticky, they'll still be fine. Still gonna be fine. For the most part, not good. Now, why am I going on this? Because at the PPI coming out today, the PPI is actually increasing. I'll get to the other chart in a second, but PPI forecast 0.2 coming in 0.2 month over month. Consensus was 0.1. Core PPI coming in 4.4 month over month. So this is the core without food and energy. Double expected. Year over year, coming in at 3 so far, forecast 2.3 to 2.5. Now, X food, energy, and trade coming in flat, but year over year coming in at 3.1, and just headline PPI year over year 2.6. And if you look at here, United States producer prices, final less demand for foods and energy year over year. This is a trend that's heading back up. Now, I'm not saying, you're going to get some offsetting things in the CPI. All right, you're going to get, housing prices are slowly coming down, rents are slowly coming down. Insurance isn't. My goodness, insurance isn't. But there's going to be some stuff coming down or leveling out. But what if you have producer price index keep climbing and they eventually find their way in and it stalls out CPI at a higher rate? Especially if they stall at CPI at a higher rate, the Fed starts cutting. And then, also shipping container rates are way up. Oil's still up again. That's going to take a while to work its way through. Metals, I mean, copper ran a lot higher, but it's still staying a bit elevated. What if it's sticky? What if it's remaining 3% or above with the Fed? That's not good for people, the average people. Top 10%, whatever. But, they start cutting. It's going to get very interesting, I think. And the worst thing is, and our interest payments are going through the roof. What if we start having to be forced to do financial? So, all right, cut back the government spending. And then the bottom 80% takes a massive dump because there's no more here. And my goodness, remember jobs? The government, whether it be federal or state and local, the government's hiring the majority of people. So what if that has to be put on hold? So it's going to get very interesting in my point of view. Now, is it reflected in the stock market? No. No. But when you have bank earnings today, they all beat. All right, what else we have coming up this morning? You have Michigan consumer sentiment. These are the preliminary numbers for July and the inflation expectations. So do not ignore 10 a.m. Eastern time. Do not ignore that. Then we got rig counts. But that's it. The big thing is at 10 a.m. Eastern. Let's see who else is here. Let's see. I got Rich. Good morning, Ted. Good morning, Royal Palms. Good morning, John. Did anybody see the Biden press conference last night? The Trump VP and Colin. Oh, the Zelensky. President Putin. Oh, geez, that was another walking dumpster fire. Oh boy, and the bar is so. Well, he didn't make any major mistakes. Well, calling Zelensky Putin, calling the VP his VP Trump. The guy is this the person we want running our country? I don't actually want either of them. All right, can we stop having people nearing the age that they should just at least Trump can just go play golf. Go play golf. Because they're both going to spend like drunken sailors anyways. They got to pull Biden. But this is not a political thing. I'm still at the point, is this the best we can do in the country? Is this the best? Period. Hey, Charles. Mortgage rates trade off the 10-year. Remember that. They traded a premium to the 10-year, which could get interesting. And I'll give you another we'll look at the markets in a bit. I don't know how much we'll look at the markets today. We will at some point. If U.S. is returning to serfdom unless something changes, but now the 10-year, if it starts ratcheting down, yields drop on the 10-year, mortgage rates will drop. We're going to see a slight drop in mortgage rate because the 10 years dropped already. However, since mortgage rates go off the 10-year, let's say we don't practice financial austerity at some point. Let's say we keep running, and let's say we go into a recession and we run even bigger deficits, and we still have to service our debt, even if the Fed starts cutting massively. All right? Because we already have a lot of debt that we're servicing. Look at the debt payments. What if eventually people have forgotten about the bond vigilantes, which is really the market saying, hey, if the market stops wanting to pay for, if they want a higher premium for the 10-year, the 20-year, 30-year notes and bonds, then the Fed can cut all they want, but the 10-year, 20-year, and 30-year could keep climbing. They could go back to climbing. I mean, what if the 10-year starts going up because people are like, no, the government is so out of control with the spending. We want more. If we're going to hold your debt for 10 years, we want higher rate. Well, then mortgage rates don't drop. Mortgage rates could actually go up. Unless the government does something like try to nationalize the mortgage rates and say we're uncoupling them from the 10-year. But what if you have mortgages even stall out at let's even say they come down from 7% to 6%, but they stall out at a higher rate? or they start climbing back up with the Fed cutting. What do you think that's going to do? Oh boy. Unless you're an all cash buyer. Hey, but everybody's not an all cash buyer. And oh, so many homes are priced. I am seeing complete junk that sold 3 years ago for $500,000. People are wanting 1.3, 1.4. Complete junk. Over 100% increase with no changes. And it's complete junk. It's even worse than when it sold. Everybody thinks they got $1 million property. Yeah, well, it can continue until it doesn't, just like the markets can continue until they don't. Speaking of that, Tesla canceled the AI or pushed it out 2 months. Whoever falls for this trip, but Tesla was not rallying off of that and did not sell off that. That was additional fuel on the fire for Tesla. But it's been gamma squeezed so much. You got Meta rolling over. The mega caps were pretty flat after looking at. See the mega caps. Nvidia's still up on the week, but a lot of the mega caps. There's your 1 week performance down. I wish I could go back to. I should have taken a screenshot. Well, the way, a lot of the market outperformed the S&P yesterday simply because it's been so massively underperforming the mega caps it's been underperforming due to the mega caps driving it higher, and the mega caps caused a sell-off, but a lot of the broad market did not sell off at all. It was actually pretty decent, but one day does not make a stable market. So, did you see the news out on AT&T with potentially all their customer calls and chats have been obtained by hackers? Which is also another thing that pisses me off with these companies. I get an email, oh, your information's been hacked, blah, 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 blah. Please get yourself some credit protect. You know what? You had a fiduciary responsibility to protect my information. You didn't, and now it's my responsibility to pay more for credit monitoring services and everything else. You know what? There's no accountability anymore. Real estate running, healthcare running, energy. The only thing coming down pretty much based off of Meta is comm services. Everything's so positive today. Fed watch. Doubt this has changed. We got 93 for the September. So according to the market, the rate cut is baked in for September. Another one baked in for November. Not baked in, probabilities for another one, and then probabilities for another one in December. Taking it back to 4. I think the market's getting a little giddy. Also remember, once the Fed starts really cutting, it does not mean things are good. Things aren't good already, but people think that just because a Fed cuts, it's magically going to solve all the problems. The Fed cuts, that's why we watch the 10-2s or the 10-3 months, because once that starts climbing above 0 again, it's typically, as I've said before, I haven't talked about it for a long time, it historically has started the sell-off. Fear and greed. Back to neutral from greed yesterday. Earnings, as JP Morgan beat, Wells Fargo beat, Citi beat, but they're mixed. Citi was up last time I looked. Wells Fargo was a gap down, and JP Morgan was pretty flat. So nothing shocking with the bank earnings so far. All right. Let's see. We'll take a look at silver. Housing prices in general, 30% less in AZ. No, they're actually more. That's what's shocking to me. What is shocking to me is they've become stupider than Chicago. They've become insane. Chicago had about, from the pre-pandemic to this spring, had about a 30% run up. Here had 100 to about 130% run up. It's absurd. I'm gonna wait for the Airbnb thing to drop. Once we really start hitting and people are forced to cut back and travel, Airbnbs are already starting to blow up in other areas of the country. They just haven't yet in Arizona, but they're starting to blow up more so in places like Florida, Texas. I'm waiting for that because that's gonna cause another big issue with real estate. But it's already causing an issue with real estate in Florida and Texas. All right, so we came back to the rotation zone. Back to the rotation zone now. We've got a little mini sell-off so far. From my point of view, here's what you want to watch for. So here's the reaction to the PPI and then the quick reversal. The market's trading in la la land. It can keep trading in la la land. Is there a massive sell signal yet? No. I'm really watching the bounce harmonics based off of yesterday's sell-off. On any bounce, well, today I'll be looking at about 56.54 to about 56.56 as the first key area for a bounce. Then 56.64. Key for me will be 56.75.25. Not necessarily for today. That's going into next week. Support right around 56.31, 32. Then I would not be surprised to see a little retest of that area. If we sell down, because we've flattened out the 4-hour rotation zone, but there's a fair amount of support by the spike low, this 56.20. If we break 56.20, from my point of view, is a pretty quick trip to 5600. Don't know if that's going to happen today. Don't know. We've got daily cycles finally rolling over. Remember, we've been pinned there, but weeklies still at the top. And on a weekly chart, look at this. Let's take a look at the weekly. Don't remember. Where did the week open? The week opened at 56.12. We'd have to get a close below 56.12 to even turn it into a red week, and that would be a very nice potential topping candle. Okay. But if this rallies at all, it's still, an upward candle, still climbing. So we'll have to see. And you got weekly cycles still at the top. Could this be the start of something? Yes. Remember, the weekly rotation zone is back at 5,500. So I'm watching for now the consistent bigger pullback. And from the bigger pullback point of view, the major level right now, the major line in the sand is back at 52.42. You can see the 50% harmonic right here. 53.36 is right by the prior rate breakout level. We based that and then broke out in June from. So that's not even doing major technical damage. Yeah, people would sit up and take notice. It's still within the weekly rotation zone. People are probably screaming the end of the world because they don't think that the markets can drop anymore. That's how ingrained this is. And investor sentiment is at record highs. Can we keep going? Yeah, because there's no major sell signal yet. But I'm paying close attention to this bounce. NASDAQ. Key support is coming in about 2,200. It's trading right now at minor support. This is weak. This has been a very weak bounce compared to the S&P. But the same thing, if we do make a new low going to the open, you're going to want to adjust these levels down for the harmonics. But I'll be looking at roughly about 20,500 and then 20,575, then 20,660. The support level, though, it's below the rotation. It's really, there's a lot of support between about 20,300 to 20,200. The Dow, triple top territory. So now it's going to be real interesting to see how the Dow reacts up here. Daily cycles are back at the top. Weekly cycles are still at the top. Against the triple top, which only slightly favors a continuation pattern. Will the Dow Will we get rotation into safety in the short term? Could happen. Could happen. And if you break this triple top area, you could see a pretty quick run to 4,100. Russell, everybody buy the Russell because the Fed's going to cut, and that's going to save the small caps. No. But Russell did some key technical damage yesterday for any bears, not for the bulls. I was watching 2135. We got to it yesterday. Breakout level, if it keeps running, is 2230. VIX, no fear. No fear in the little VIXy. The DAX in little short-term mini double top territory based off the conservative targets. But the DAX also based off this should still magnet 18,886 is the magnet price in the DAX. The notes still, I mean, what's the next thing? Close above the 62.5. So can we still see the 10-year run higher based off probabilities? We can. Based off probabilities. Now, where would that put the yield? The yield, interesting enough, has not closed below 62.5 on the micro yield. That's the key level I'm watching, 4.137. So based off the futures, the note futures, the probabilities are mixed here because the note futures say the notes futures should still run higher, but the yields have not confirmed yet. So we still have mixed messages. I'm still watching 4.137. The 10-2 still climbing against a prior major breakout area. Key resistance, but a breakout area. Paying very close attention to this. Dollar index still pulling back. Going to watch the weight. Yesterday we got a little bounce in it, but the dollar index starting to roll over. I'm surprised the dollar didn't bounce more based off the PPI. And the market's ignoring stuff. I think the market's still pricing in perfection and still saying, everything's going to be fine. Dollar index, though, if we do substantially break down 103.20, still key support. Crude, interesting. Crude, mini, we had the little mini double top that came down, hit the first and second target, caught in the rotation zone, rotated up. Now you have a little more substantial. This is one side of a top still that's still valid. Now, I'm not saying it has to trigger, but this is a new great area from a longer term. At close below 80.81, that shifts my focus to then a bigger pullback into the prior consolidation area. Other than that, crude, interestingly enough, daily cycles at the bottom, weekly cycles still at the top, daily cycles, I should say, bottomed and are climbing. So could it still run up and hit this 87.5 magnet price? Yeah. And this is not, from an energy perspective, deflationary. Gold, still closing up yesterday. We captured the 75%. Still, magnet price is 243.50. Coming back, testing the breakout level, and so far holding. So nothing's changed with gold on the short term. The price is still probabilities, no guarantees. Probabilities should still at least retest the high area from the middle of May and the middle of April. Silver, let's see right here. Is valid for a little mini potential double that's confirmed but not triggered. At a minimum, you need a 4-hour on the close below 30.71. But again, lower probability against the daily rotation zone. And if it did close below there, I'd want to follow through. This one I would only use for pullback levels. Why? It's sloppy on the 4-hour. See all this extended base and then the push up? It's extended on the 4-hour. It's got very strong support base here. It's got the rising daily rotation zone and is trading against prior made significant support. So if this were to trigger, I'd need to follow through on a daily, and then I'd look for pullback targets only. Personally, that's the way I would deal with it. So there you go, Daniel. Hey, Christoph. Nothing shocking. Great album. There you go. There you go, Ted. All right, you get this, even though they will not confirm or deny until the end of the month. This was your intervention. This was your intervention yesterday. Okay? Here was the CPI number. The little reaction of CPI. Here was the intervention. This, I think it was coordinated. You know, you already got the little reaction to the CPI number, and then they were just waiting. And then they just went full-blown dump. Now, fascinating enough. Come on, let me jump ahead. There we go. Look where it's still holding. Look where you got two bottoms down here, but look, that's at the prior breakout level. So yeah, we had the little mini double top. You couldn't wait for a close on that, and that came down, hit the targets. But I'm not saying it was even tradable at that point because the massive intervention. But it's only back to where it was. I mean, it's only back to where it was June 19th, June 18th. Can it pull back further? Yeah, but the key area of next key area support is 156.90. Remember, the last intervention didn't last long. So, is there anything yet to watch for? Not from my perspective. And by the way, the yield only dropped slightly. Euro, still at that 75%. Still the magnet price is 109.33, which is why we can still see more pullback in the dollar. Bitcoin, still no trigger on the double. We've got to confirm twice, but no trigger. And that's for just a bounce play. Spiders, on a continued pullback in the spiders, your major support is about 555. Again, yesterday, use this. My advice is use the harmonics from yesterday. First thing would be little move up, but the key levels I'd be looking is about 558.25, 559.10, and 559.89 on a closing basis. If it did continue, this isn't a technical pausing bar in a 4-hour yet, but if it did continue down, I'd be using 555, which we already talked about, then 554.21. That's exactly how I'd set that up for the spider traders. The Q is very similar. Although the Qs would not be surprised if it does go down to retest yesterday's lows. But the key levels, 492.25, 493.92, 495.52, 497.12, and on a closing basis, 498.72. The key area for support. See, we don't have a great even 4-hour pausing bar. Based off the 1-hour, you'd be looking at 489.13, 487.53. I'd rather just see a stronger pausing bar, so I'd only use that in case there's a rapid breakdown in the open. Tesla, big reversal yesterday, but key support now back at 219. NVIDIA, after hitting the second target, coming back down. Does this mean the double is over? Technically, no. Technically, it still needs either a close below about 124.65 area. I think that's about correct, or a trade through 122.47. technically it could still bounce back up and hit that third target. All right. But if you look at other stuff, what did I miss? I think I got silver. If you look at Apple, which has been on a massive tear because they're going to sell infinite more iPhones because of their AI, not AI. This did not, it just returned to the daily rotation zone. No major technical damage, not even to the prior breakout zone. So again, there's no massive topping pattern yet. There's another one. Meta, which, we had to sell off there, but that's back to the consolidation that spent most of March and April in. We'll be watching for a bounce and a potential gap play, but then this is getting into very toppy with Meta. Very toppy with Meta. Significant divergence here. Higher high in price action, much lower high in RSI. But the key level for Meta to give it all up, to really start giving it up, is close below 462.62 on any pullback. Let's see. I think we're about done. So we're into the open. Remember, 9 a.m. or 9 a.m. Central, 10 a.m. Eastern. Let's just see where the tick opened. The tick. Not bad opening. I'll be watching to see how the market bounces or reacts on a tick bounce. A tick bounce. See, yesterday you did not have a lot of negative tick. The broad market was not over. It was not a lot of broad-based selling pressure yesterday, is what I was talking about. There was the mega cap selling pressure, but that's only a handful of stocks, not broad-based. This is what I'm saying. The broad market actually outperformed the index yesterday because the mega caps took it on the chin. So, and even let's take a look at the heat map right now. Where's my heat map? Where's my heat map? There it is. I mean, if you look at this, you ignore now, banks are selling off a bit. I have to go into what they said on the calls versus just their earnings. So you got the banks, their financials are pulling back a bit. You got Meta and Tesla. But look at, other mega caps are mixed. And look at the rest of the market. That's holding up pretty well, which is consistent with this tick so far. So can the rest of the market start lifting a little bit for the mega caps? Yeah. Because I think you're going to get some rotation in from to a little more broad market support in at least the short term. At least the short term. So the S&P looking to build a slightly higher base, and if the tick holds up, I'm still looking at these targets higher based off the harmonics. Nothing has changed with those levels. That should sum it up. That's where we sit. So hope everyone has a wonderful, wonderful weekend. Hope you didn't mind my extended commentary to start off the live stream about the PPI and CPI. My biggest fear is that we hit into stagflationary point of view where on the longer term yields, the Fed's handcuffed. Well, they don't control that anyways, but the longer term yields actually stay higher even with the Fed cutting. And we end up with inflation being sticky, and then the Fed's really handcuffed because we're in a recession. And I still think Volcker had it right. They should have just jacked the crap out of rates, put us into a recession. Remember, Volcker, it was 18 months of pain, and then we got the rip-roaring 80s. This is going to be death by 1,000 cuts to me. But we'll see. Just my thoughts. Oh, thank you, Richard. Good to go look at a couple of properties this afternoon, then a couple of open houses tomorrow. Again, we're being very patient. Most of this is just information gathering. If I do find something in, we found one we really like, but it's overpriced by, still they've had to cut their price, but it's overpriced by still, and this is a now market, not even real estate pulling back. It's overpriced by about 10% still. And there's no way I'm paying up in a market that's going to still drop. Sit on my hands. Remember, if there's no good trade, a good trade is sometimes just sitting on the hands, waiting for the good setups. Markets and housing. Sometimes it's best to sit on the hands. With that, I'll talk to everyone next week. Have a wonderful, wonderful summertime weekend. Bye for now.